Oh, why, hi there. I'm Max Keiser, and this is the Keiser Report. Is there any end to the bull market? No, there is no end to it, Stacy.
All news is good news in our markets since basically 2008. Really, since 2000, it's been always the Fed. Don't fight the Fed for sure. You can't fight the Fed because the Fed will print and print and print. And of course, everything went up in 2019, as we pointed out, and even assassinating the head of another state or a leader in another nation cannot stop this bull market. But, you know, here's a chart that was quite interesting, I thought, telling, you know, as soon as the U.S. did assassinate Soleimani in Iran, well, he was in Iraq, but the Iranian head of their military division, gold, crude, and Bitcoin, as you see, they all spiked at the same exact time with the same movement. Bitcoin is there, then we have gold and oil. And so they all went up together. Safe haven.
Well, a couple of things. So Bitcoin is proving itself to be a safe haven like gold. So Bitcoin as store of value and safe haven, as we've been saying on this show for 10 years, finally the market's coming around to that point of view. The idea of Bitcoin as medium of exchange, and you need to emphasize the transactionability, is false. And that's why something like Bitcoin Cash is a non-starter. However, let's look at this other idea. You talked about 2008. What happened in 2008? Well, the markets were constrained somewhat because of the plumbing of the way markets work. The pipe that delivers cash or liquidity from the central bank to the primary dealers, to Wall Street, to commercial banks, is somewhat well known in terms of the architecture involved there. In 2008, with Tim Geithner and Ben Bernanke and all those president's men, they decided to expand those pipes to be 20, 30, 40 times bigger to accommodate much more money printing. And we're still seeing the benefit of that because they went ahead and printed almost 20 trillion fresh dollars that they swapped with banks for their junk. And they put that on the balance sheet of the Fed, which now has many trillions of dollars worth of junk, as do all central banks around the world. The question is, how fat are those pipes? Can they absorb another 20 trillion in junk? And I posit that they can. So this has got a long way to go. And these wars only stoke the money printing, which means much higher prices.
Yeah, of course, and dropping bombs just waste money, right? They're over 100,000 each missile, and that sends some of our inflation overseas. But I think now that we're now officially in 2020, Trump, all he does is, of course, look at the stock market. That's his entire gauge for all that he does. So anything to keep the stock market up. That's why you're going to see now, not only do we have the China trade deals on, no, it's off. Yes, it's on. No, it's off. Because, of course, he's trying to manipulate the prices on the stock market, send some sort of investment move. Here, the same thing we see with this war. It's going to be war is on, war is off, war is on, war is off. I think for the next few months leading up to the election, you're going to see that sort of thing because you see this Wall Street rallies around war threat, war economy rages on, because remember the markets fell right after on Monday after the weekend assassination of Soleimani, but then they soared towards the end of the day, and that was because on that letter that was fake. No, it wasn't fake. It's real. No, it's not. We're not really leaving Iraq. Remember that whole letter. So you're going to see more of that sort of stuff as we go on, and it's all about these pipes that you talk about, encouraging the Fed to print more money, because remember, Trump is also not only looking at the stock market, but he's always looking at the Fed and what Jay Powell is doing, and he's not printing enough money. And if he's not printing enough money for me, I'm going to drop a bomb, so he has to print more money.
Exactly. People always ask me about Trump, and I say it's a New York thing, right? Trump is a New Yorker. And, he looks at the global picture, and he sees tension in the Middle East. He sees Iran doing a dance with their neighbors, and he's like, you know what? Let's just cut to the chase. Let's just take out a guy in Iraq, and we're going to get more money printing right away because I want to make my yacht payment this weekend. Why futz around? This is the New York way of doing things. I said it when he first got elected. It's like having a New Yorker in the White House and having a New Yorker run the world. I'm a New Yorker, so I got to tell you, I'm loving it.
Yeah, just go to Times Square and look at the nutters in there and how crazy it is, and you'll see.
See, I got my New York thing on.
Makes
This
sense.
is what we do in New York. Hey, come on. Hey, you got to forget about it. Yeah, right? So this is Trump, and he's, that's the way the world needs a New Yorker, and he's the consummate New Yorker.
Also, I want to point out that in 2007, March of 2007, remember General Wesley Clark said that the plan was that the U.S. is going to invade 7 countries in 5 years, ending with Iran. So at that time, though, and I want to look at these charts, this is Lockheed Martin and Raytheon. So they provide all the aerospace sort of weaponry that, we go at war from air now. We don't send in troops because the population will be against it if too many soldiers die. But not until we actually killed General Gaddafi in 2011, October of 2011. Right then is, here you see 20 years of records, not much going on in defense contractors until that point, because that was one of the nations that General Wesley Clark had said after Iraq and Somalia and Sudan, and then it would be Libya, and ultimately Iran would be the last one. So I think investors started to price it in as we're actually going to go to Iran. So they've known this since then, I believe. That's my interpretation.
The markets are discounting mechanisms, and they tend to discount the future. And so you see a stock chart like that, and you can tell that, yes, the markets are starting to tell us that an Iran invasion or an Iran event or a war with Iran is imminent. So that was telegraphing this months in advance. And the defense contractors, there's no greater waste of money, right? There's no more inefficient corporation. They're more inefficient than Hollywood studios, to give you an idea how inefficient or Lockheed or Raytheon are. And that's brilliant if you want something out there that's sucking up half of every tax dollar collected in America. Half of the $3 trillion or so collected goes to defense contractors in America. And if you want to print another $5, $6, $10 trillion, let these guys loose and just let them go out there, because it's going to require another 10 or 15 trillion in money printing. That means the stock market's got another 20, 30% to go on the upside.
Despite their low ratings, this is good news for MSNBC, because remember, many of their commentators on there are actually former defense officials, former Raytheon and Lockheed Martin executives, former Intel, CIA, FBI, all these the people that are pushing war. So this is good for them. Of course, Lockheed Martin, certainly. I think also Raytheon take out ads against these important shows, pushing people, to accept wars. And this is always right.
Back in World War II, they used to paint pictures of pinups on the bombs.
Greta
famous
Gable, wasn't it?
Greta Gable, et cetera. Now they put Rachel Maddow.
Right. So, I want to also say, as you point out, this money printing, because there is the other war, and that's the financial war, the economic war, the class war against the bottom 99.9% that suffer the consequences of not only the war in the Middle East, they're the soldiers that have to go over there, but also the war to maintain the zombie banks and the zombie economy is the money printing. Because remember, again, this week we've had the Fed doing more emergency repo. Nobody knows what's going on. Only a few in the war room know which banks or hedge funds or entities are in trouble. Well, the Fed plans to consider permanent ways to keep money markets stable. Remember how we always go into Iraq and it's going to be temporary, Afghanistan is going to be temporary, Yemen is going to be temporary, and then we end up with these permanent bases. I don't know how many bases we have in Iraq. This whole notion of we're going to leave, we're going to stay, we're going to leave, we're going to stay, we're going to leave, we're going to stay. We're still in Germany 60-something years later. This is now what started as a temporary measure is a permanent measure.
Right, this is, again, a New York thing, right? Instead of futzing about and saying, hey, maybe we're going to raise rates, maybe we're going to lower rates, maybe we need to be prudent, maybe we need to think about wages, maybe we think about the economy, maybe we have a job to do. No, they're like, we're just going to print money ad infinitum, we're going to open the spigot and walk away. There's no policy, there's no economics, there are no economists. We just open it up full blast and walk away. That's the way to do it.
You're right, in that Wall Street salesman, you just got to get them to answer the phone or open the door. You stick your foot in the door and you say, I'm just going to take a minute of your time. If you don't like this vacuum cleaner I have to sell to you, you can just like, kick me out. But you get in there and you schmooze them and you sell them on this, and then it becomes permanent. And that's what they're saying. This is a permanent situation.
Well, the vacuum cleaner salesman famously barges into the door and then throws a bag of dirt on your floor.
Yes, that's us.
Now you need him to clean up this dirt, and by the time he's cleaned up the dirt, he has sold you a vacuum. So the Fed is saying, we're going to dump a ton of money ad infinitum into the economy. It'll create malinvestment. It'll create defense contractors roaming the world, bombing innocent civilians for giggles, for fun, just because they look their fancy houses in the outskirts of Washington, D.C. And then once they've bombed these places, then there's those countries like Iran or wherever, they're like, oh my God, this is terrible. Let's do something back. And they'll blow up a building here or they'll blow up a building there. And then the U.S. will say, oh my God, we got to print more money and we got to send in more, right? So it's a self-fulfilling prophecy of money printing. And by the way, Australia is expendable.
You mentioned Hollywood earlier, and they say that D.C. is Hollywood for ugly people. So the fact that what we're seeing in the past few days, the last week and a week and a half, is Team America. You know, that's why they reflect each other. LA and Washington, D.C. So Trump is saying, like, yo, you can't kick us out. We trashed your country. We destroyed Babylon. And you know what? If you kick us out, you're going to have to pay the billions of dollars that we spent trashing your country, or we're going to destroy these your cultural artifacts. Well, all of that was predicted 15 years ago under Bush, with Team America. So this is a reflection of each other. They act like they're so high and mighty in Hollywood, as Ricky Gervais would point out, and he said, don't make political speeches because you have no right to, because they are the same.
Because most people in Washington and in the liberal media elite, the New York Times, Washington Post, CNN, are informed almost entirely from South Park, The Simpsons, and bad Hollywood B movies. That's their source of education. That's their view of the world. Anderson Cooper knows what he knows by watching South Park. And he comments about this nightly on CNN. And is there any wonder then that we're just bombing people to get money printing so that we can get them to hit us back? Remember, they have to hit us back. The other countries have to bomb us now so that we can justify what we just did if we're going to print more money to keep the stock market rolling. That's a necessity.
Of course, Keiser Report, only here did you hear you can't taper a Ponzi. So we had said this back before the Fed tried to taper the Ponzi, and by raising interest rates. I remember Jay Powell, when he raised rates in 2018 in December, it caused the huge crash. The markets fell by almost 20%, and then he turned on the spigot again. So they admit it in this article about the permanent facility. Another way the Fed has been managing interest rates is by growing its bond portfolio again. The central bank says its purchases aren't economic stimulus, and that its renewed purchases are meant to correct the excessive reduction of its balance sheet size. Again, like I said, we look for this going forward. Remember, we're leaving Iraq. No, we're staying in Iraq. The statement from the Department of Defense is like, we don't expect Iran to retaliate for this, but that's why we're sending thousands of troops there, because we expect them to. Like, they say it all in one. They all do Fed speak now.
Right, and who was the audience that Trump sought when he droned this guy dead in Iraq? Jay Powell. Anyway, we're going to take a break. When we come back, much more coming your way. Welcome back to the Keiser Report. I'm Max Keiser. Time now to turn to Michael Pento of pentoport.com. Michael, welcome back.
Thank you for having me, Max, and Happy New Year to you.
We've got a lot to cover here, Michael. Gold rocketed on Trump's war in the Middle East. Other than these sort of black swans, however, what is the case for gold at the moment, if any? Michael.
Well, the case for the gold never changes, Max. It's always about the direction of real interest rates. And real interest rates are falling, and they're falling at a faster rate. And if you add to that the fact that our annual deficits are now $1 trillion and going much higher, then it's a great time to buy gold. Oh, by the way, the dollar is also in a topping phase. Those three conditions spell you better own gold.
All right, fair enough. Let's move on. How are you positioned at the moment in terms of defense stocks? Our Defense Secretary Mark Espers was previously a lobbyist for the likes of Raytheon and Lockheed Martin. Your thoughts on this sector if we go full-blown war, much bigger than just the recent Iraq incident?
Well, I'll tell you, I mean, I've owned aerospace and defense stocks in the portfolio for the past 6 to 8 months in the portfolio. It's a 10% position. So this is not a new position for me at all. They are not massively overpriced, even though the entire stock market is massively overpriced. And it's just hard for me to imagine that we are going to cut back on defense spending when we could have the whole Middle East into complete conflagration. So, I mean, if you want to look at something that's recession-proof, and something that, of course, Republicans love, and even some Democrats and the deep state are enamored with completely, it's defense spending. So that's something you really should have as part of your portfolio. But I want to just add this really quickly, Max. 2019 was a pretty good year for stocks. The S&P 500 was up about 28%. But people seem to forget that the fourth quarter of 2018 was a very bad quarter for stocks. As a matter of fact, the S&P 500 lost about 20% in 2018, the fourth quarter of 2018. So why did stocks appreciate so much in 2019? It was all about the same thing. It was all about central bank counterfeiting, okay? The Federal Reserve added $500 billion, $500 billion to its balance sheet from mid-September till today. And they printed $57 billion just on January 2nd to make sure we had a nice kickoff for 2020. Okay? M2 money supply was growing at 3.6% in the beginning of 2018. It closed last year growing at 7.6% year over year annualized rate. So please don't mistake me or you as a perma bear. I run money here, okay? I am not constantly short stocks. But what I am saying is that the foundation of this economy and the global economy, the US economy and the global economy, is faltering. It is fracturing because it's predicated upon fiscal and monetary madness. So I run stocks like a hedge fund. I run my management style like a hedge fund. I try to make money in all markets, but I'm most concerned about preserving your principal and making sure that we can make money when the real crash arrives.
It's a calculation, really. I mean, the move to take out this Iranian fella in Iraq, obviously, they did the math, and they figured that it would not upset the money printing in the U.S. to paper over any problems they might have geopolitically around the world. And I don't foresee any problem arising, short of a meteor striking planet Earth, that would stop the money printing, and they have room to print another 20 to 25 trillion. So they have a long way to go on this runway. And it's great to be cautious, but America at this point is proving that the U.S. dollar can be printed ad infinitum, and the rest of the world can't do a darn thing about it. Now, Michael, what are your thoughts about the Fed might do if the war escalates? I've just stated that I believe that no matter what happens, they're just going to have enough room to print money. But former Chairman Bernanke has recently quoted as saying, we could go negative without causing harm. So there you have it. They could go negative. Well, that's my point, Michael. You differ.
Well, I mean, Europe this is not an experiment that's never been tried before. The ECB, the European Central Bank, has a negative interest rate, and their banks are faltering in a very sharp manner. So, I mean, has a 0% or negative interest rate helped anybody in the world as far as their economic growth is concerned? No. I mean, how can a bank make money when they're paying interest on their deposits at a central bank? I mean, what's the spread between their loans? Okay, their deposits and their loans are basically the same thing. There's no margin. They call it net interest margin, NIM. There's no way that banks can make money. And if they can't make money, they don't lend. So they keep their money at the central bank and pay them to do it, because people are in a debt-saturated situation. I mean, let's just talk about the corporate debt scenario here in the United States and around the world. But let's just talk about the United States for a second. the IMF said that if we have a recession that is 1/2 as bad as what we had in 2008, 40% of the entire developed world's corporate bond market would be owed by zombie corporations. Okay, so corporations that don't have the cash flow to pay interest on their debt. They have to borrow more debt just to service their debt. 40%. Max, what are we going to do in the next downturn? That's why the Federal Reserve is going to be cutting rates in 2020. They only got to 2.5. They had to quickly retreat to 1.5, and they're panicked about this amorphous inflation rate that they just can't get to 2%. We have to be at 2% and way above it because we were below it for so many years. And you know that's why the middle class is going extinct. Max, do you know the top 1% of the wealth in this world now owns 50% of the wealth. The top 1% of the wealthiest people on this planet own 50% of the wealth. And their wealth is growing at 5 times. Their income growth is 5 times that of the 3 quintiles in the middle class. 5 times faster. And why is that? Because central banks around the world are eviscerating the middle class by bringing up energy prices, by wars, by inflating their housing costs and their education costs, energy costs, clothing costs. But the richest of us, among us, can own stocks and bonds and real estate and become wealthier and wealthier. And that is why I may seem like a perma-bear. I'm not. I'm just saying that the economic structure, this is what you say too, we point out that the foundation underneath the global economy is predicated and based upon sand.
Yeah, but I would say I'm a perma-realist. I mean, you mentioned the top 20%, their wealth growing at 5 times what the middle 30 or 40% is growing at. But you don't, I mean, I look at these top 20% and I see an extraordinarily rapacious and ugly group of craven psychopaths. Look, they're willing to sacrifice Australia on the altar of money printing, right? Australia is the victim of central bank policy and ignorance of what that does to your ecology and what that does to your economy. They're willing to throw Australia onto the bonfire of their vanities. Where will they end? Where will it stop? It won't, Michael, until all the wealth is held by 5 or 6 people. And that's not going to stop. Nobody's going to stop it because none of these other countries are going to stop using the dollar because they're cowardly. But let's move on. You are invested in gold at the moment, Michael, but in fact, you're not a gold bug. But what are your thoughts on the FANG stocks, Facebook, Apple, Amazon, Netflix, and Google?
Okay. Well, first of all, I mean, my portfolio, we've been long Russia, we've been long utilities, we're long bonds, long gold. So we're not upset here about what's going on. We're just trying to make money in all situations. But I'm telling you what, you mentioned FANG. So let's just look at how expensive the market is. So at the peak of the mania in the Y2K 2000 NASDAQ bubble, the Wilshire 5000 as a percentage of the economy, so the widest measure of stocks as a percentage of the actual underlying economy was 140%. Today, it's 152% of the underlying economy, and I will submit to you that the underlying economy is artificially goosed by money that is free. So the economy was much more, the underlying economy was much more sane back in the year 2000 than it is in the year 2020. So if you're with an advisor that's long FANG, okay, or you want to throw Microsoft, and Facebook, Apple, and Amazon, and Google, or if you're just long the S&P 500 because you just got a dollar cost average, don't you know? You're in for a huge shock because what you're doing is you're owning the Japanese Nikkei Dow in 1989, which is still down 40% 30 years hence. And you're owning Chinese shares, the Shanghai shares in 2007, which is still down 50% from 2007. Okay, that's what you're doing. You are top ticking an epic bubble in U.S. stocks and in U.S. economic growth predicated upon free money, which will absolutely implode when the corporate bond market implodes or the idiotic Federal Reserve achieves its 2% inflation target plus whatever number. Because, if they measure inflation at 2%, it's really closer to 8%.
Right. How would you like to buy gold at $250 an ounce to where it was in 2000? Well, if you look at gold versus the global debt situation, it's cheaper today than it was at $250 in 2000. You've never seen gold under, this cheap in probably 100 years relative to the global debt. That's the other way to look at it. But anyway, Michael, thanks so much for being on the Keiser Report, and we'll see you soon in New York, I hope.
I hope so too, Max. Say hello to Stacy.
Oh, yeah, definitely. And that's going to do it for this edition of the Keiser Report with me, Max Keiser, and Stacy Herbert. Want to thank our guest, Michael Pento of pentoport.com. If you want to catch us on Twitter, it's Keiser Report. Until next time, bye, y'all.